Welcome to the FX, and here we're looking at the US dollar, and everything's pretty much going according to plan here, because last time we spoke about this we were looking for a move above the 80 here, and that's what's occurring now. And our target was the 80-20 because of the 50-60% retracement level through here. However, and also too, I need to point out that normally in an ABC correction like this here, an A and a B and a C here, the C wave here has got normally some sort of equality to the length of wave A here. So in this case here, we can look at the same sort of 61.8% target here. But what's sort of bothering me about this a little bit is that this little move up through here appears just to be the first move, so to speak. This is like 5 waves here. So if that's 5 waves there, then we're going to go much higher. That would be the 1, the 2, we're going to go in the 3, the 4, and the 5. So we could actually go a little bit higher than I expected. So let's just sort of see how this pans out. It will vibrate across the 80 a little bit and can pull back to the 79.90, but should stay above that. I thought I had a smaller chart, but I didn't. Going on to the euro here, so the euro being the mirror sort of opposite here, we're also looking for this to pull back into its 50-60% retracement level here, and what we're really looking for was a break below the 138, which we have got now, which is great. However, that sort of extension on that C wave that for the US dollar would be the same for here as well. So this move down through here is 1 and 2 and 3 and 4 and 5, which would put it into more of a bearish picture. And, we don't really want it going down past the 137.50 area. So my main point here was that if we had the wave count right, we'd be looking for a move below the 180. We'd be looking for the A, the B, and the C coming down here somewhere, and then developing support back on the 138 here. And that would be our long trade going up here and taking these highs out. So it's all going according to plan. It's just that this move down through here was just a little bit long, and has sort of thrown it out a little bit. And this is it here, this move here. So it'll be interesting to see how far this actually extends here, and sort of down for 1, back for 2, down for 3, 4, and 5 down here. So we're looking for something like that, and then a move back up through here. The 137.72 would be an important point for this market to bounce from. This little pattern in here is corrective, so we'll see that move further down from here, because from this, counting the third wave down here, if counted correctly, we would be seeing this as down for 1 here, back for 2, and then down for 3 here. And the third wave would be the 1, the 2, nice strong third wave, the fourth wave pulling back here somewhere, and the fifth wave here. So that would give us 1, 2, or 3 to here, then another one back here for 4, and then down for 5 here, just for the third wave, 5 waves in the third wave. So all that said and done, this market shouldn't go back above the 138. So if it does, then that creates a long trade, and then there would be some sort of thing that we didn't understand within here. For the Australian dollar, I just want to go to the bigger picture again. The alternative count here is that we were looking for an A and a B and a C wave up through to here at the 38.2 retracement level, or the fourth wave of 1 lesser degree, of intermediate wave 4. So this is an alternative count. So we can have this move coming down here now. That's the possibility. The other side of the coin is that on the weekly here, the count that I've been following here is that we're looking for a 5-wave sequence up through here. So currently we're at the top of this third wave here. That's why that alternative wave count is there, and we'll be looking for a wave 4 to pull back, and then a wave 5 to the upside here. So this wave 4 is what we're focused on at the moment, and that wave 4 is this little blue guy here, and the 38.2 retracement level is quite close to the 92 here, it could be the 92.50 area, 92.30, somewhere in there. I'll come to that in a moment. but as we see it, counting 5 waves up from this low here for the third wave would be the 1, the 2, the 3, the 4, and the 5. And then we're looking at this correction here that to come back to the 4th wave of 1 lesser degree. So this move currently down through here appears to be in 5 waves. So that means that if we've got 5 waves here, that means we'll get a bounce coming back 50-60%, which would come back to roughly the 94, and then a move down into the sort of 92.50, 92 sort of area through here. So just working on that particular correction and breaking that down somewhat. This is sort of what it looks like through here. So we're looking at, if I can just draw this out here, I thought we may have only had 3. We've got 1, 2, 3. I thought we had this one here. We might be moving up for another one here, but we've got that 4th wave and the 5th wave coming down to here. So that will be followed by an A, and a B, and a C, and then another move down in 5 waves through here as well. So that's kind of what we're looking at the moment. And just drilling into that a little bit here, I've got it already drawn out for us here. So we'll have to look at this as wave 1, 2, 3, 4, and 5 here that's not finished yet. So that move there is corrective. So that means we'll make a new low through here. But coming into group 1, which is 10, 20, and 30, you know the market's going to bounce around a lot, but we'd be looking for a larger bounce back up here to the 50, 60% of the move down through to here. So that should be a 5, 3, 5 structure through here. How far it actually comes up, we'll track that because there'll be 5 waves in the C wave through to here. But at the moment today, we can expect this to edge somewhat lower through here, and that's based off the premise that this particular move through here is in 3 waves here, so that's corrective. So we'll see that move down. And also, once you know too that this is group 1 here, so once the pivot within group 1, the 2 here becomes the retested resistance, then you know it's going to be pulled down further from here. If we do find support on top of group 1, then you know that it will be positive, and there's a larger correction happening here in terms of an A, B, C here for the A wave, down for the B wave, and then up for the C wave through to here. So it's only when the pivot becomes the retested resistance that you know that you'll be moving down further, and that's how you short within group 1 anyway. Not that we do short within group 1 because it always bounces around the 10, 20, and 30 and doesn't make good for trading. We'd only trade through here and going long and building a long position on each of those levels. The Euro Australian that we've been tracking on got the 5 minutes here. Let me just get organized here for a second. I had to restart the machine here. In a bit of a nutshell, that 148 that needs to become I'm just going to go back even further if I can find it in here. I've got a couple of counts in here. I'm just going to go back to the actual larger picture here. I mean, what we're looking for here in the bigger picture, as you may remember, is that we're looking for wave 4 to be completed here in terms of an A and a B and a C wave. And in this C wave here, we're looking for 5 waves, and we believe that we could have the the 5th wave in here at this point here, but we would need, in the bigger picture still, would need the 150 as a support, and then that way we would be trading larger positions to take out these highs here. But trying to get a few positions in the market before we get to there is what we're trying to do, and we would only do that if we had 148 as a retested support in here. So that's what we're looking for, and it could still fail at that price there. So this is the 5 waves that we were looking for coming down through here. This move up through here so far is not really offering us a very nice impulse wave. Okay, so that's a bit of a dilemma there. But let me unorganize all these charts here. Just on the 5-minute chart here, and coming off this low here, we can see that we've got a nice 5-wave structure occurring. So we've got 1, 2, all the way up for the 3rd, the 4th, and the 5th here. So what will happen when we get to just above the 148 there will be that this wave here needs to complete through here. But once we've got our 5-wave structure here, then we'll get an A and a B and a C that can vibrate between group 2 and group 1 here. But after you got 3 swings here, then you're looking for support here, and you can quite comfortably trade to 149 from there. The pound yen that we've been following just had a bit of a computer crash then, but look, the pound yen, if that's 172 across here, then we've got our first high above the level through here. So what you're looking for in picture terms is you're looking for a correction like this here that will take an equal distance across the 172, and if that's the case, then you would start looking for this scenario here. You're looking for support back on the 172, and then you would use this here as your trigger to work to the upside from that point there. So that's what you're looking for. This market can fail at this point here as well, and the failure at this point would be seeing a larger 5-wave structure unfold like this here. And if that's the case, you have to allow the 5 waves to complete, and then you need to look for the retested resistance in 3 waves to the 172, and then you can look to short from that point here, but only once you've come down for another little 5 waves in here, 3 back, and then use this reference point to short from this point here, because if you get 5 here, that means you'll get another 5 on this side over there. All right, thank you.